Excited for another episode of Around the Coin. Today's guest is Kenton Prescott, the CEO of Sense Finance. Kenton has previously worked at the MakerDAO Foundation, where he was an engineer for over a year, and he started Sense Finance, which Sense is directed at building a decentralized, permissionless, fixed income protocol where teams can build and develop new yield primitives for DeFi. So we define exactly what all that means. We talked about yield curves, some more nuanced DeFi considerations. We talked about Celsius. We talked about the implosion of the Luna project and stablecoins, generally speaking, specifically algorithmic stablecoins and how they work and what the risks are. I hope you enjoyed this conversation. Very, very smart guy. The project is well funded. They've raised about $5 million. Small team and extremely interesting conversation. So I hope you enjoy. Here is Kenton Prescott. All right. So just like that, Kenton, we are live and recording. Congrats on all the progress so far. Yeah, I'd love to just dive right into it. You started a pretty cool project called Sense Finance. You're a pretty young guy. It seems like the first project that you've led on your own, but you've had experience in crypto at the Maker Foundation. How did you sort of parse out the industry and the opportunity when you started early on? Did you sort of see a trend in how things were going and felt like you had enough knowledge, skill set, network, insight to build it? Or what was the early founding story?
Yeah. So I was at the Maker Foundation for a few, and at Maker, for those who don't know, Maker is a protocol that enables or that creates the DAI stablecoin. And the way that it's created and destroyed is through the use of over-collateralized loans. And so every loan that someone has a fee on it. And early, we realized after the launch of the Maker protocol, we realized that there was a lot of volatility in those fees. And so just thinking about ways to hedge that volatility and to give borrowers fixed rates was our first exercise into what the fixed income space in DeFi looks like. This was back in and the fixed income space was nascent then. It's still nascent now. But we realized actually that the mechanism that we were using to enable fixed rates in Maker vaults, that could actually be applied elsewhere. So we basically generalized that. We applied it to other yield bearing opportunities in the DeFi space. And so now anyone can get, or the goal is that anyone will be able to get any yield bearing asset.
And DeFi being traditional finance?
Oh, sorry.
Oh, DeFi. Got it.
So this is decentralized finance. For quick, just familiar, but I can give a super quick one sentence a collection of various products and services that live in a decentralized context, and that also are financial primitives too. So borrowing and lending, exchange, stable assets, all of those things are available in the DeFi world.
And give me a sense for where Maker Foundation is, I guess, today and where they were when you were working there?
Yep. So the Maker Foundation was the entity that employed me, as well as 60 other employees. Its goal was to create the Maker protocol and bootstrap the initial development and liquidity and just excitement around the MakerDAO project. The foundation has since dissolved, and most of the employees are actually working for the DAO. A DAO stands for Decentralized Autonomous Organizations. And Maker as a project has over $6 billion like DAI outstanding, and they have like 50 plus contributors to the DAO itself. So it's actually thriving as like a cryptocurrency central bank on chain. So it's quite exciting.
And do you think of it as structurally unique, or maybe ask how do you see it as structurally unique as a stablecoin from the other popular stablecoins like Tether, USDC, whatever else?
Yep. So a great question, actually. So Maker is, there are trade-offs that the MakerDAO system has made in the direction of being less more decentralized, less censorship resistant, but in turn is less capital efficient. So the way that Maker works and DAI works is that every DAI is backed by at least $1 worth of a basket of some assets. And the at least is like a cushion, right? So if you have like $200 worth of ETH, you're able to mint like $100 worth of DAI using that ETH as collateral. And that is way less capital efficient than, say, a USDT or a USTC, which requires only $1 worth of the unit in that's outstanding. And so, but at the same time, like any actor, like there's greater counterparty risk that exists, right? And so you can't have this like access to a stable coin without having to also accept some of that counterparty risk too. So.
And the risk being that the value of the Ether in this case drops below the value of the stablecoin?
Yes. Yeah. So that has the risk in like the MakerDAO land, and Maker actually has a cool way of discharging like assets that are dropping too fast. And so what it will do is kind of similar to call. If someone has borrowing position of some type on a centralized exchange, then if the value of their portfolio drops faster than their debt, then that position will be, the collateral thereof would be grabbed and then swabbed and then swabbed. And so that's what Maker does. And it's just simply to ensure that the value of the collateral is never less than the amount of DAI outstanding.
And how about recently? There's been a lot of decrease in all across the board cryptocurrencies. Has this shaken the core of this way of creating stablecoins, like by pegging them to or backing them by other cryptocurrencies? Is the DAO team like on edge, or have they? Does it break the system at all?
It has certainly stressed. It has stress tested all of DeFi. Back in 2020 March, there was like the global the 2020 pandemic recession that stressed Maker probably most, and that stress test also happened like within this last month. There's been a drawdown in asset prices. There was not Tether. There was the Terra. And so Terra was an algorithmic stable coin that only was backed by the governance coin that controlled it. So like Maker is a stable coin backed by like a diversified basket, right? Or like ideally, like eventually it will be this diversified basket of like assets, right? It could be bonds, it could be like US stock, it could be crypto assets, Bitcoin, etc. Terra was backed by the governance coin that controls it, and it's what actually happened is that there was concern, like the Terra stablecoin was like $13 billion worth of value a month ago, and it actually depegged, and that depegging essentially created a death spiral. And the project has since blown up. So it's it's certainly like the recent drawdown has certainly like stress tested all of DeFi out there, and it's we're actually just now the remains of it actually. So
why was it a technical or algorithmic hiccup somehow, in that it depegged? Like what do you understand the technicalities of what happened?
I would be able to. I'll give a few comments, but I will caveat saying that like I'm nowhere near like the expert here. But it does it has something to do with the game theory behind it. Game theory being like it's an algorithmic stable coin. That's what Terra was. And there's like when things go bad, there's no force that corrects the outcome. It actually, like every force is going in the exact opposite direction, and that's exiting the system. And the only system is like by exiting, you actually decrease the value of the governance coin, and that just decreases the confidence of the stable coin itself. So it's just it's called a death spiral. And it's an system to like build and like hope scale or hope that it scales because of just how fragile it is. So,
do you think it was? I mean, in hindsight, 2020, but when the team is building this, clearly a lot of sophisticated investors put money in. You know, I'm sure a lot of unsophisticated investors did as well. But was there a takeaway? Like, do you feel the industry is, and people are more knowledgeable, their mental models are better, they have a more sophisticated outlook because of, like, did we learn something about how to assess these projects? I haven't observed that sentiment, but I'm curious if that is something you feel like people at least have learned what went wrong specifically so that it doesn't happen again.
Yeah. I think that so what's interesting is that there have already been attempts to what Terra has built in the past. There was a project called, I think it was called Bitcoin Shares or something shares, and this predated DAI actually. Many of the like founding team and like founding architects came from this like BTC shares project. I'm forgetting the name now, and it's unfortunate, but that used an algorithmic stablecoin design, and it ultimately he failed. That has not been the only project that has failed. That's followed this exact same design. It's a seigniorage share, or it's not seigniorage shares, but it's like it could be similar to that though. And I think that it's. I don't imagine that an algorithmic stablecoin of the size or an algorithmic stablecoin is going to reach the size that it did probably ever again. But it is still the holy grail of DeFi financial engineer fanatics. Like it's the holy grail.
Yeah.
Use like a partially reserved or like a fractional reserve of value to back something else. So. Yeah, hopefully that gives you a view. I gave you just more of a brain dump, so I hope you don't mind.
Yeah. I can't appreciate the sophisticated challenges in creating an algorithmic stablecoin. It would seem to me that it's simpler than it comes off as, but again, that's because I don't understand why it's so difficult. It seems like if you could get reliable access via API to all the different fiat currencies that are out there, could you, I mean, again, I'm just talking out of my ass here, but it seems like you could, in theory, maybe it's a technical limitation or it's a reliance and security issue where you have to somehow gather the data off chain. And therefore, if you're building strictly an algorithmic stablecoin on chain, maybe the issue is how do you communicate and pull back the data that's off chain to get a sense for where the world is. Is that kind of the central tenet or the central idea as to why algorithmic stablecoins are so difficult is getting reliable, safe, secure data on chain from the outside world is very, very difficult.
It's not that actually. It is. There are like systems that have been built that can reliably port information from the off-chain world on chain. The problem is building a system that relies heavily on game theory. So in the event you have two actors and something happens, right? What do these actors do when they don't know what the other person is doing, right? This is a classic like prisoner dilemmas problem. And turns out both actors should be doing one thing, i.e. buying back the currency when it's below peg. But what they actually do is they want to exit. And they want to both exit at the same time. And fear is what drives the collapse of these platforms. There's no actor that is isolated from that. And so that is my educated, my non-educated guess. So
Yeah. It seems like game theory. I think of positive feedback loops, like what you were talking about earlier. That it's difficult to evaluate it's difficult to reconcile what the price of a stable currency should be or the value of it if everyone's trying to leave it or if everyone's trying to get in it at the same time. When the water's even keel, that's easy. But then, of course, when you put the stress test on, it's more difficult.
Yeah.
Interesting. Yeah. It seems like the most reliable source is like an audited bank account that just has US dollars in it. I mean, that seems to be what works the best today.
Right.
Yeah.
The US dollar is a fractional, like it's built upon a fractional reserve like system itself. But I think there are other forces though that allows it to thrive, and like it just has the biggest network effect in the world, and it's used as like it's used to pay taxes, and I think that like if I was very barely like knowledgeable about USDT, or not USDT, but UST, which was he. I'm even less so more on like the US banking system, but it's the network effects that allows it to stay king in terms of like the stability of it. So, one thing I will say is that so long as like DeFi exists, and so long as like people are able to like come up with these insane ideas, attempts will always be made. And I think that like that's a blessing and a curse. The curse is that like there will be future projects that fail, and people are going to lose money, unfortunately. Let's hope that it never happens again to the size that we just saw. The great thing though is that DeFi offers an amazing like ecosystem where people can build and experiment and like try new things. And I think that like that is just not something that we have seen yet.
Do you anticipate a backlash? Have you seen any? I mean, is $13 billion effectively just moved around and people are now without it? Do you think reasonably there'll be a negative reaction, either from regulatory wise or like we'll just maybe the depression in the crypto prices is from this, at least in part? It would seem to me that you can't just collapse a project this big and then move on. Like there's some reaction.
There have been comments from Janet Yellen. There have been comments from like other like politicians out there. I haven't been following those as much. I know that the founder Do Kwon. Are you familiar with him? Have you seen him online? Yeah. He's on Twitter. He is an interesting character, incredibly it's much easier to like be against like typically when a project like fails, like the world is not against them when they're down, but like Do Kwon was probably like one of the most arrogant people on crypto Twitter that it's like not hard, like it's easy to like kind of kick them down. I'm not doing this, of course, but in any case, there have been. I think that there is like I can't make a comment to it, but I wouldn't be surprised if there's like pending legal action that's being explored now. Has to be.
There has to be. There has to be. Yeah, you can't. I mean, it's free to sue people. So when people lose, hundreds of thousands
Millions.
or however much people have, it's just going to happen. I think the same is true with Celsius, another major project that's right in the middle of it. The similar kind of collapse on DeFi. Well, Celsius is kind of even more interesting because they are more opaque. We didn't know exactly what they were doing with the funds. You could only speculate. They're kind of in this middle ground between a bank and between DeFi and like centralized on-chain world. But to me, it's not. They don't embody the really exciting parts of crypto. They're more like a hedge fund that just invests in crypto and then gives you a return on that and kind of has a facade. Whereas I think what you're interested in more so is around the on-chain trading and on-chain yield and DeFi, which I think you would agree is certainly more transparent and probably much more secure, or at least much less likely to go to zero in something like this.
Yeah, a few comments on that. One, actually, you asked earlier about the like drawdown from the Luna collapse, and so Luna, or Luna being there was a foundation that like oversaw called the LFG. They were established to basically defend the peg. And they purchased Bitcoin to defend that peg, and so they actually sold like billions of dollars worth of Bitcoin, to no success. So I think that like that actually was big sell the price of Bitcoin when this was happening. Regarding Celsius, to be honest, I actually haven't really been following along Celsius as much. I guess they offer a high yield to retail investors and take those funds and like perform an ARB. Like they are borrowing low, and then they take the difference. I'm guessing is it basically that?
Yeah, I think it's not as much that you have the right mechanics correct, but they don't try to make a spread on between what they're buying and selling. They just have a payback token, like it's not even a governance token. It's just I guess you could potentially say it is, but it's just a token that they made that if you'd like to get paid your interest in sell their token, you can make 10% instead of 7% on a token. So that, and of course they own the value of Cell, I'm sure, the founding team and investors. And so they drive that price up, but that has gone down to the ground. So not a good situation over there. And maybe that makes DeFi stronger. I mean, do you interpret it as that? Or is it just too cloudy for most people to parse out the difference between the different projects?
I think actually, if it was that you would get an incentive from holding Cell, then there are some like reflexive attributes to it, right? Where like reflexive being like not like a Ponzi per se, but like Ponzi-ish, and like presumably if you bought more Cell, then you may get a higher yield, right? Like that's what I'm guessing. And so like you're encouraged to like buy up more horse Cell and reduce the float that exists out on the market. And so therefore like a constraining supply means that the price will go up, but the same thing happens in the reverse direction as well. So there's a project out there called Olympus, and it actually like some have claimed that Olympus has Ponzi-ish like attributes as well. And the great thing about Olympus is that it's all on chain. And And to your question on like, is there like, what's the benefit of DeFi? Well, it's just that and there's more accessibility. I think that like those are the core offerings of what DeFi gives. And it like, I won't go too deep into the market or into the microstructure of it, but if you have markets that are transparent, transparent and auditable by everyone, then markets become more efficient. Prices are better priced, and I think that like liquidity levels are just generally more healthy if every market participant is like aware of how liquidity is moving across time. So and DeFi offers all of that too. So.
How do you split your time? Are you all in on Sense Finance? Do you advise other projects, or how does, and just as a sense of scale, I think you guys have raised about 6 million, somewhere in that range. So I imagine a team size of somewhere around 10 plus. Is that like, I'd love to learn more. Like what's the size, scale, traction, and direction of Sense?
We announced the project back. We've been building it since April. We're a team of 6 with 1 part-time, so team of 7. And that's been because we've been pre-PMF. So we haven't convinced ourselves, like even though there's usage around Sense, we haven't convinced ourselves that PMF has been reached yet. And so we've been purposefully staying small and just relentlessly focused on finding top talent before scaling. And then my
how
time
do you,
as well. And I'm all in on Sense. So.
So how do you find product market fit? Do you think about it as, let's come up with some protocol product, and then like tactically, what are you
PMF
thinking about?
DeFi is
Oh, good. You can jump back in.
Oh, okay. Oh my gosh. I thought that the entire thing was your reaction was perfect.
Yeah.
You like didn't even
nothing
flinch.
new.
Like that was perfect. That was amazing.
Catching us back up. So we were diving into DeFi, talking about Sense specifically, team of 7, pre-product market fit. I'm interested in how does the DeFi protocol / project get product market fit, and specifically, what's the milestone or the checkpoint that you look at marching towards?
Yep. So PMF in DeFi is interesting. Constantly, there is an immense amount of interest that comes from users that is purely being driven by some expectation of an airdrop, right? And so that influences their actions tremendous. An action that they would not otherwise do in the past is now done because they're expecting that they would receive a financial reward. It's not being driven by their own problem being solved. And so that is something that we've been really we the line very carefully We have not announced like any airdrop plans. We don't have like public plans for a governance token, and we're doing everything that we can to remove the amount of noise that could exist in a token world. And so, and so really, it's just, what is PMF? Well, it's solving a problem, and it's solving them. It's giving people the thing that they want. It's making something that they want, and so ensuring that we have like KPIs that gives us a proxy for what that level of interest is and like need is that we are just consistently.
And how do you think about the type of unique demographic that you'd first want to go after with Sense? Of course, you can go beyond that, but like, who's the early real user that gets value from it? Yep.
So there are three types of users within Sense. One is people who want to lend their assets for fixed interest rates. There are on the other side, there is people who want to like buy variable rates, like cash flows to variable rates. So we call them yield traders. So they're taking directional long short bets on future yields of yield-bearing assets. And then finally, in between it are the LPs. So LPs are the liquidity providers that give their assets, and the first two actors have the ability to enter and exit their positions with the existence of LPs. So, actually that people that want to get fixed rates they value interest rate stability. So these are DAOs that will get a fixed yield on their treasury, and they want to match future liabilities of known sizes. On the future yield side, you have quants and funds that are more or less like pricing in, like they have their own models that allow them to like have a good understanding of where interest rates will go, and so they're able to make like intelligent bets on future rates. And then we also have LPs. LPs want a competitive yield, and over the past like several months since launch, we've been doing everything that we can to just further unblock the core value prop that each user is able to grasp through the use of focus on infrastructure. So that means like creating LP positions that are more capital efficient. We want to give LPs more yield. So rather than have one asset that has not earning yield and the other one that is, let's ensure that both assets are earning yield at all times. That is just one example of the infrastructure like improvements that we've been focused on over the past 6 months.
And when you think about this, do you think about this from a high level macro landscape perspective, saying, okay, these are the 7 or 8 major protocols and projects that have a lot of attention, a lot of capital. These are the different positions that each of them are sort of competing for, or the market, demographic that they're competing for, and then you kind of look at it from a high level and say, this is where we can slot in. Like, we can go after the very wealthy, unsophisticated investor and be really safe and have that value proposition. Or we can build the most complex trading tool and we could target like professional daytime traders. This would be more like a user demographic overview position, like strategy conversation. Or do you look at it as, hey, let's build a bunch of stuff, test it, and figure out what sticks? Is there an approach that you feel that comes most natural to you and the team? Yeah.
Both.
Yeah.
We there are a bunch of DAOs out there that are sitting on like the cumulative size of treasuries in DeFi is north of $5 billion. And much of this capital is not earning any productive whatsoever. And I think that there's it will take time, but these DAOs need, once they become comfortable with earning yield, I think that the logical next step is becoming comfortable with earning fixed rates. And so that's one. That has really, it's a strategy that we have been exploring, and we think that as DAO infrastructure and DAO treasury management matures, there is going to be a more and more interest in fixed income. Every treasury management strategy in TradFi incorporates fixed income in some way. And so this is, we just, it's an inevitable trend. It's just a matter of when, not if. And if we can help, if we can help to make that transition faster, smoother, with a soft landing, then that is what we're most excited about.
And do you see it as specifically targeting the treasuries of the DAOs, as that's kind of a unique enough market to go after?
In the short term, yes. DAOs they have a head count, and they're paying for salaries for the next year, right? And they want to basically match future liabilities. They want to match future liabilities with known cash flows, and so they're actually willing to pay a fixed yield. And if you have a premium for fixed yield, then you can basically give that premium to the communities of these DAOs. So that's the broad strategy that we are exploring now. It's called DUX. It stands for the DAO Upside Community Sale. So it's basically DAOs are saying, hey, we'd like to sell our future cash flows for capital upfront, and we could use that for either matching other future liabilities, or we could use it for other activities. And the person taking the other side of that trade would be the community members that want to buy a discounted cash flow stream.
Gotcha. And does the product market fit and overall strategy going after DAOs, does it get affected strongly by ups and downs in the market, or do you look at it as so strategic that you're just banking on DAOs growing, the number of DAOs growing, and it's kind of a how is the ups and how is the downs specifically impacted you guys? Is it significant or mildly?
So the market drawdown indirectly leads to smaller yield, right? Many of the yield sources are driven by token emissions. They're driven by leveraging, lever longing on a token price. And this has all led to higher yield aggregator yield rates, such as on Yearn. And now that the market is down, the appetite for leverage is down, the token prices are down, and that's going to lead to just a smaller yield and less volatility in the yield as well. So we expect that the breadth that Sense was meant to serve, and still is meaning to serve, the breadth is being reduced, and we expect this to happen always. In bear markets, the breadth is reduced. There are less yield opportunities, less volatility, etc. But the depth is increased. And so we are relentlessly focused on cash flow streams that are unaffected by market prices, at least directly. And so the main one is staking yields. So the yield earned from securing networks such as Ethereum, right? You're familiar with ETH2 yields?
I thought, no, tell me ETH2 is not out now and it keeps getting pushed back. That's all I know about it.
Yeah. Well, you're very accurate. That is basically it. In the next 6 months, there will be a transition from proof of work to proof of stake. And that transitions of the consensus algorithm that manages the Ethereum blockchain. When that transition happens, all the mining equipment that has been used to be a miner is going to become obsolete.
Wow.
And now those that want to become a miner in ETH2 will be basically fronting some stake. They are staking their Ethereum and their Ethereum on top. And so this yield is more or less the yield that secures the Ethereum blockchain. And what's so cool about this is that it should be the risk-free rate for ETH-denominated yields on Ethereum. The reason for that is because the yield is being printed by the core consensus algorithm of Ethereum itself. If that fails, then every app that's been built on top also fails, right? So that actually marks as the risk-free rate. And what we've actually done, we announced this in May. Sense has onboarded a yield-bearing asset that sources its yield from ETH2 yields, and it has created a term structure on top such that there's the Web3 yield curve. So currently out there on the 1 month, 6 month, 1 year, and 5 years, one can earn a fixed rate in ETH. And we expect that every yield curve beyond that will actually be priced off of this fundamental Web3 yield curve.
But this doesn't exist yet. You're saying that you're building this anticipating the yields from staking on ETH2 when it launches?
So ETH2 currently exists. It's not doing anything though. It's just earning yield, right? ETH1 1.x, that currently exists too. And in about 6 months, there will be this merge where ETH1 will kind of live in ETH2. And so there are these things called staking derivatives that live on ETH1 that allow you to capture the yield earned on ETH2. And so we have taken those staking derivatives and we've added a term structure on top, thereby creating this yield curve.
So what does that mean for somebody who just has, say, Ethereum sitting in a wallet or Nexo or somewhere? Should they be putting it on Sense or somewhere where they can earn a yield, or is this something that would be valuable to them in the future when the projects merge?
Yes. Yeah. So they are able, if they have Ethereum and they're earning yield on BlockFi or Nexo, etc., they have the ability to take that Ethereum and earn either a variable yield by buying a staking derivative, or earn a fixed yield that gives them a fixed rate over a fixed term. So I'm not going to share my screen, but I'm going to just tell you what the current prevailing rates are now. Currently on Sense, it's currently live actually. So on Sense, one can get a fixed rate of 6.33% per year for the next 5 years. So that is, it's basically up to the user on what type of interest rate they want. Do they want a variable one or do they want a fixed?
And how would somebody assess, what should someone be thinking about when they assess the risk of that? Is there, how do you think about that?
So there are two types of risks. There is, there's just one type of risk. It's smart contract risk. So there's risk that Sense does not function the way that it should be in 5 years, right? There's a risk that the staking derivative that it's been built on top, which is STETH in this example, there's a risk that will not function, i.e. one may not be able to go from STETH to ETH after the merge occurs. Because and then finally there's the risk of Ethereum as well, right? But that risk is inherent. If you're holding Ethereum, then you're basically accepting that risk.
And so I would imagine the sense people are less concerned with the Ethereum risk. At least they're more familiar with that. So they're looking at sense and thinking, okay, what if Kenton and the team run out of money? What if they all decide to go to Hawaii and not work in the project anymore? What if they make a mistake, program in some loophole and some hacker takes advantage of it? Are these the types of questions that one should be asking themselves when trying to assess a project? Do these questions are they the right questions to ask? Should there be other ones too?
Yes. Yeah, there is. That's all captured in I should have been more descriptive, actually. It's not just smart contract risk. It's like operational risk too. There are protocol operations that need to exist and need to happen for it to function appropriately. And the great thing, I think that we've done and like spent a lot of time building at Sense is we've tried to make it as decentralized as possible from day one. Now there are certain like functions that are like admin functions that the Sense team has like the privilege over, and these are just simply there for safety precautions. In the event that something happens, then we'll pause everything and ensure that there's an exit strategy. The great thing though is that none of these functions allow us or any like malicious actor to steal funds. So as long as someone carries out these protocol operations at maturity, then you'll be able to get your funds then. Now, another like awesome thing is that since the maturity too is actually a public function. So it's like anyone can access it. Anyone has the ability to operate Sense. And that is because it's a public deployed on Ethereum. As long as Ethereum exists, Sense will also exist, and it will just behave as it was designed. So that's the like power actually of some of these DeFi protocols. You put less trust in the founding team, assuming that they have their own like sufficiently decentralized operations, and you put more trust in the code itself.
And how do you think about evaluating Ethereum at this point, given the anticipation of this merge between 1 and 2? People often criticize the gas prices on Ether for making transactions, which is a major issue because if the currency is not liquid, then it's difficult for everyone involved. Do you think they are kind of falling apart, like becoming more disorganized, less compelling for developers to build on top? Or do you view this as like maybe some productive difficulty that they have to get through to then be more powerful once they make this merge? Or I guess another way of asking is, do you see a light at the end of the tunnel? Are things trending worse and they're being outcompeted? Or how do you sort of make sense of the Ethereum world?
Yeah, so Ethereum is, there have been a lot of like sobering discussions about the Ethereum that have been going on in the Ethereum space over the past like year. They were driven by usage. And what we basically saw is that users, the majority of like new users coming into the crypto space don't value decentralization as much as the Ethereum like ecosystem does. So that's why there was a big uptick in usage on Solana, Avalanche, Near, etc., all these other alt ones. The problem with these other alt ones, though, is that they are not as battle tested as Ethereum. And like, if you look at Solana, it's gone down like over 8 times this past year. And so I think that application developers are going to consider that as they think about how to scale their operations and what to build on next. And I think that it's a question that builders need to ask themselves. And like, yes, builders are going to go towards, they're going to build in an environment that users are most comfortable with and where users can afford, right? If the gas prices are so high, then like a large chunk of users may not be able to afford that, but they will also consider the downtime and how that affects user experience. So I think that like this is all just to say that Ethereum needs to scale, and if it does not scale fast, then these other like alternative L1s will become more reliable and more battle tested with time. And I think that the Ethereum space will have it will continue to have increasing competition until it fully realizes the future that's been laid out from several years ago, which is proof of stake and a sharding architecture, right? Where there are like multiple parallel shards on Ethereum that exists and like helps it scale, along with like L2s. So there's other like L2s out there, Arbitrum, Optimism, etc., that are built on top of the L1 chain. But other than that, I'm not sure.
Yeah.
I'm not sure what will happen.
I mean, there's so much pressure on the core development team at Ethereum. It feels like, I mean, your project, you've raised money, so investors, you'll have like all the users, and you're, one of, I would imagine, hundreds, maybe thousands, like of projects that are built on Ethereum. The amount of pressure that's on the folks building at the core level and moving, doing everything you just described, making sharding more efficient and reducing gas prices. Like, do we reach a certain point where does this pose an existential threat to Sense and every other project on Ethereum? Is there a way to reconcile whether things are progressing or whether there's just a technical wall? I mean, do you suspect it'll be a breakthrough moment when the Ethereum team is like, hey, we did it, we figured it out? Or is it like slow progress month over month to the point where finally, years from now, there's something, it's just difficult to read into the situation. And yet the situation is so important. Yes. I think that teams, so there's nothing that prohibits teams from being chain agnostic. And so they have, and we've seen that now. Actually, there are many like DeFi protocols that have started on Ethereum and they've become multi-chain. There's OpenSea on Ethereum. There's OpenSea on Solana. There's Aave on Ethereum, Fathom, Solana, Avalanche, etc. There are projects that have already de-risked that themselves from that future, and then there are teams that have not yet, and they just need to be prepared. And it's something that we've been thinking on at Sense as well. We think that there's just the most capital and the highest, the most yield opportunities exist on in the Ethereum space, but that will not prohibit us from thinking about alternative L1s and L2s, etc. Yeah, that makes total sense. And then what else are you interested in? So you're building Sense, you're thinking a lot about the Ethereum ecosystem, yield, product market fit, I'm sure product development. You're tweeting? Are you writing actively? What else like generally comes across your plate or into your mind?
I'm someone that I enjoy exercising. I have been recently getting into a series called The Three Body Problem. Have you heard of this one?
Yeah. Isn't there a science fiction book on this as
yes.
well? Yeah.
Yep. Yes. Yep. So the series is that. So the book series, it starts with The Three Body Problem, and the one that I'm currently on now is The Dark Forest, which is book 2. It's quite good, actually. And I've been, when I'm not thinking about sense, I'm thinking about that because it's just so good.
What is the like general plot line?
It's a science fiction, and you basically have an interstellar civilization separate from the human race, and they are fleeing their world because it's basically dying, and they're moving across. They're basically going to migrate to Earth, and so the plot is like Earthlings trying to figure out how to address this, because there will be an eventual day when they all arrive, and so that's how the plot unfolds.
You think it's realistic? You think it could happen or it may happen?
I'm not sure. There's the Fermi's paradox, right? That it's like, there are hundreds, thousands, and millions of planets out there that expect, if they're the chances that we're not seeing any life out there, or have been given the opportunity to glimpse at that, then we should see life. But yeah, I'm not sure. What are your thoughts on it? Do you have any
I think there's
alien thoughts?
Yeah, my intuitive thought is that there's life all over the place, and that we just don't have the tools to observe them, and that the reality is that we're so far into this game. There's 13.8 billion years since the Big Bang. There's we're over a couple billion years old as a planet, so we're a sliver. So no one realistically would know that we're here, or if they did, that we're not able to pick up on the communication method, and that might be not photons traveling through space. It would seem less interesting to me that the universe is limited in its communication of intelligent life on different planets by light. I think especially by light traveling through space, given how big everything is, it would just mean that there's these completely isolated places and planets that, and maybe there's clusters of planets that have 5, 10, 100,000 together. But for the whole, I picture it as, I find what's interesting is this circular repeating patterns of nature. The way a flower might unfold is the way solar panels should unfold, the way the mind works is the way computers work. And there's patterns like that in the abstract sense. It's not like they're literally geometric patterns, but I think the connectedness of our minds, all the neurons in the brain, allow for a higher level conscious experience to happen in my experience. And then I think that happens collectively, as we're building Starlink and we're hyper connected together. There's an emergent phenomenon that then develops its own intuition and realization. And I think that probably continues. There's probably when we link up with, and however we do it, with other intelligence, then there might be another sort of this is probably thousands of years down the road, but hopefully it happens. I want to be the neuron that connects into the network, not the one that dies off. My only criticism is I think we should be generally thinking more about taking in information from the universe as opposed to sending it out. So I love Voyager 1 and 2. We blast these things out there. That's great. I think we should do 10,000 of those, like shoot out tiny satellite, put out messages in the bottle. Don't put one message in the bottle, put out 10,000. And then also have massive telescopes sitting on the moon to take in as much as we can. It's great to go to Mars. Nothing wrong with like sending a robot to Mars, but it just feels like not the best use of attention to just be driving robots on Mars. That's my stick.
That is a future that is way more inspiring and exciting than we have the only life out there, period. Like that would be so boring. So I subscribe to yours that like there is probably life out there, and it's just our job to survive long enough such that we have energy to eventually interact with them. I just read a book. It's called The Precipice by Tory Ord. He was professor in ethics at Oxford. He's also one of the founders or biggest advocates of effective altruism. He basically, The Precipice is a book that calls out existential risk to the human race. And he makes a case for why we should be devoting more resources and time towards ensuring that we that risk has been sufficiently mitigated. So it's been quite interesting, but it like ties into what we were just saying, right? Like if we get past the precipice, then we can hopefully fully be on track to reaching the human potential, which however one could find that, right? Traveling the known universe and interacting with other life, etc.
Yeah. I'm also developing a greater intrigue for, I think that in the West in particular, like take European countries, America and Canada, like loop in the West. And we say there's certainly a contrast to the direction of our attention from the East, from like Buddhism and Chinese traditions and Indian traditions. They complement or oppose each other in that the West, we tend to look outward. We tend to observe. We consider science as what can be objectively measured. And objectively measured is that, hey, do you report this? Does everyone else report this? It's a collective subjective, but the same application of that scientific method could be applied to the directionality inward of what's it like to get into different states, to go into dream world. And there's been some like Carl Jung studied this a lot. He was under Sigmund Freud, but the energy comparison between the outward attention and the inward is dramatically different. And we have a lot to show for it. We have rocket ships and computers and all these things because we've manipulated the environment and understood it in a way to serve our purposes. And when you go inward, there's kind of just a wisdom or an understanding you gain. You're not building anything. You can't show it off. And so I think information transfer generally flows easier. It's more obvious to see the outside world. It's harder to like have that shared subjective internally. But I think that's what Buddhism is. I think that's what a lot of the Indian traditions have been about for thousands of years, is what is it like to go inward? And I think that my hunch is that there might be something really, really, really interesting there when you can measure and apply this scientific method to a lot of people doing these practices. Layer in like psychedelics, layer in legalization and more funding towards this. And then maybe sprinkle in some quantum mechanics and wormholes and who knows where that goes. But it seems like there is good stories to be had there. Yes. I love how you've like, it's not just like the individual experience, but it's a collective one. It's an internal, like subjective but collective internal, like internalization
experience that I think is it's a unique perspective, and I haven't heard of that yet, actually.
Yeah, it's easy for people to take the like the prototypical academic physicist who is atheist and needs everything to be scientifically represented to believe anything. Like I'm picturing Richard Dawkins comes to mind as like kind of the pinnacle of this, ultimate skeptic. And then they will never take on board anybody's individual tale or experience because it's anecdotal. And there's a lot of legitimacy to that way of thinking. But then if you take hundreds of people who can independently reproduce it and retell the stories, that's kind of what's happening in the psychedelic research, which is why I find it really interesting. So who knows where it goes, but it seems like it's going somewhere. And just purely speaking from problem solving perspective, like the PTSD that veterans experience and depression and anxiety that people experience and the effect that even something as simple as breath work or meditation can have, it's like, I think about, okay, we want to solve a complex problem, product market fit, right? How in the real sense, there's a creative necessity to be had there. It's like when you're solving hard problems and you're coming up with new ideas, it really helps to have creative flow. And I think cognitive science can help in that real practical problem solving, creative flow generation, which is super cool.
What's the biggest, the largest like study or research center that's like looking into the effects, these collective experiences that you mentioned? Is there anything that I can follow?
Yeah, one is the biggest is probably MAPS, which is I think it stands for Multidisciplinary Psychedelic Study. Multidisciplinary Academy. I don't know what that is, but MAPS, you'll find it. And they're the ones who funded all the MDMA research and the psilocybin research. Actually, in Oregon, where I live, psilocybin is becoming legal now for facilitators. So you can, and they're the organization that help raise money and change laws so that can happen again. After the 60s, 70s, psychedelics were put in effectively like not allowed to be studied at all. So yeah, now that's the Pandora's box is opening again. It's amazing that it closed. But yeah, they're a good place to start. Cool. Kenton, where are you on social media? You have Twitter, Kenton, I think it's just your name, right? Kenton Prescott with 2 T's.
There it is.
Awesome. And we'll include all the links for Sense in the show notes. Anything else you want to throw out there?
If you're interested in DeFi, then jump in the Sense Discord and say hello. We have a community in there that's excited to interact with others. They're excited about Sense, but they're also excited about just the general trends in DeFi as well. So hit us up. My DMs are open, and excited to see everyone online.
Cool, man. Congrats on the progress. Keep doing it.
Appreciate it, Mike.
All right. Bye.
Thank you.